Imagine waking up one morning, checking your portfolio, and seeing red everywhere. The market is crashing, panic is spreading, and investors are losing billions. But here's the thing, smart investors aren't worried. In fact, they saw it coming and took action before disaster struck. In the next few minutes, I'll show you exactly what they did to protect their wealth and even profit from the crash. These are proven strategies used by the world's best investors. If you want to avoid panic, protect your money, and profit like a pro, stay till the end. If you find this content insightful, don't forget to like, subscribe, and share to stay ahead in the market. Strategy 1. Focus on quality businesses. Warren Buffett's moat strategy. The biggest mistake during a crash? Treating stocks like lottery tickets. But Buffett says, buy businesses, not stocks. He looks for companies with strong balance sheets, high ROE, and an economic moat, a competitive advantage that protects profits for decades. Example, in 2008, while others were selling in panic, Buffett doubled down on Coca-Cola and American Express. Those bets made billions. Actionable tip: before a crash, identify fundamentally strong companies with pricing power, low debt, and consistent profits. These are the ones that recover first. Strategy 2. Avoid over-leveraging and stay liquid. Rakesh Jhunjhunwala's risk control. Ever seen people take loans to buy stocks and then lose everything? That's a surefire way to disaster. Jhunjhunwala believed in risk control. He always kept cash reserves ready, so when the market crashed, he could buy instead of panic sell. Example, when markets crashed, he quietly accumulated Titan at dirt-cheap prices. That single move made him a fortune. Actionable tip: keep at least 10 to 20% of your portfolio in cash or liquid assets. This gives you ammunition when markets crash. Strategy 3. Invest with a 10-year horizon. Raamdeo Agrawal's QGLP model. Want to know a secret? The biggest stock market gains happen after a crash, but only for those who stay invested. Raamdeo Agrawal's QGLP model stands for quality, growth, longevity, and price. It's about finding great companies and holding them for decades. Example, in the 1990s, he bought Hero Motors, erstwhile Hero Honda, and held it for over 15 years, despite crashes. His patience paid off with 100x returns. Actionable tip: ask yourself, will this company be stronger in 10 years? If yes, ignore short-term noise and buy more during crashes. Strategy 4. Avoid the hype and stay disciplined. Nitin Kamath's pragmatic investing. FOMO is the biggest portfolio killer. When stocks are booming, everyone wants to jump in. But smart investors, they stay disciplined. Nitin Kamath always warns against buying overhyped stocks at insane valuations. Example, many retail investors bought Paytm at 2,000 plus in 2021. Today, it's down 75%. Kamath never touched it because he sticks to simple, scalable businesses. Actionable tip: avoid stocks with sky-high PE ratios and zero profitability. Stick to boring but profitable businesses. Strategy 5. Diversify and hedge smartly. Time-tested portfolio strategy. What happens when you put all your money in stocks? When the market crashes, you crash with it. The best investors diversify. They hold gold, bonds, and international stocks to balance risk. Example, in 2020, while Indian stocks crashed, gold was up 25%, and US tech stocks like Amazon soared. Investors with smart diversification lost far less. Actionable tip: allocate 10 to 20% to gold, bonds, and international stocks. This acts as a safety net in crashes. Crashes are inevitable, but they're not disasters. They're once-in-a-decade chances to build wealth. Which of these strategies will you apply first? Comment below. Let's navigate these markets together. Stay informed, stay invested. See you in the next video.